3.
Hey, welcome to the Mortgage Minute for May 31st, the end of May already, and as expected, widely expected, and as I had suggested previous Mortgage Minutes, the Bank of Canada did not change interest rates today. Today was the big announcement by the Bank of Canada. We knew they weren't going to raise rates, but what we were looking for was the indications in the language they used as to when we're going to see future rate hikes. The interest rates, the next time the Bank of Canada is going to meet is July, then September, then October. And if you recall from previous Mortgage Minutes, there was a lot of speculation that we might see rates jump in July. Now, after today's announcement where they said basically, again, the same old suspects, global economic recovery is plodding along, but there's worry about the U.S. economy, growth in Europe, disaster, the fallout from Japan. Again, all these things are impacting the local Canadian economy. Now, they're saying the bright spots in the Canadian economy were business, investment, manufacturing, housing. Those three items are all going to be negatively impacted by an interest rate hike. So it was interesting to note that although we're seeing a strong domestic market, the indication is now we won't see interest rate hikes until the fall, maybe even until, as one economist suggested, we might not see rate hikes again until 2012. So it'll be interesting. I personally think you're going to see something happen in October. And it's interesting. In the meantime, headlines will continue to confuse individuals. A global think tank, the OECD, urges Bank of Canada to raise rates. What they're saying is that Canada has to start raising rates to anticipate a more normalization of the markets. However, as we saw, the Bank of Canada said, yeah, we get that, but there's still too many issues that are pulling the economy downward. So in the meantime, on one day you're going to hear that the interest rates remain unchanged, but then in other headlines you see that banks trimming mortgage rates. So banks are dropping interest rates on one hand, but the Bank of Canada is making no change on the other. What this means is, keep this in perspective, when you see a headline, and you notice that was a really small one, said banks trimming rates, what they're getting into is the long-term fixed rates. The long-term fixed rates are governed by the bond yields, whereas the Bank of Canada will control the variable rate. So when you hear the announcements in the paper today and tomorrow that the Bank of Canada made no rate change, that's because they're talking about the variable rate, and that's all they control. A couple of quick points to watch out for as we move into the summer months. The United States will stop stimulus spending June 30th. No need to fear end of U.S. stimulus. Watch for a lot of these headlines. That's going to be interesting coming up. I'm going to watch that carefully. And one of the big, I just had to throw this in because a headline that I saw, I haven't seen this headline for 2 years. It's my favorite word in a headline. Contagion hits Euro's bigger economies. And again, contagion is what we talked about when the subprime crisis all fell through, when we saw the fallout of panic in the streets and everything. We're now seeing that word contagion being used when talking about Europe. Again, we're talking about Greece, Portugal, Spain, and Ireland. So ongoing issues over there, continuing issues, and the lack of stimulus, or the end of stimulus spending in the United States. All these things are going to factor, and of course the higher Canadian dollar. We got a prolonged period of lower interest rates, but folks, that's not going to last forever, so make sure you're making smart decisions today that impact not only what you do today, but also in the future. Rate hikes are on the way, but they're not going to come as fast, and they won't be as steep. That's the Mortgage Minute for May 31st. Remember, go to peterkinch.com to follow up on more information. Thanks. Bye for now.